Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of The Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from our amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jake Kingsley, filling in for Jim Matthews, who is traveling again this week in South Dakota at the Central Plains Dairy Expo, where you'll remember just a year ago, he levied quite the smear campaign against me and unsuccessfully attempted to cancel me on the internet.
What is the capital of South Dakota?
I believe, is it Bismarck?
That's North Dakota.
Okay.
Jake, what is the nickname for the state of South Dakota?
I don't know, the President's Mountain State? I don't know what it is.
Is it also because your nickname in high school was Jake the Jackrabbit?
That is not the case.
I don't know, viewers. I think it might have been the case.
And this week, we'll get our revenge. Joining me today from Green Bay, Wisconsin, our Vice President of EverAg Insights, Miss Erica Maedke, and again from way out in North Carolina, our Grain Markets Intelligence Manager, Mr. Mike McGinnis. How are you this morning, Erica and Mike?
Doing well. Good to be back, Jake.
Doing well, Jake. Glad to be here. Can't wait to see how you're going to cancel somebody on the internet.
I'm not very good at it. I know it's tough to do, but we'll take our best shots while he's out. Can't defend himself. In the meantime, today is Thursday, March 21st. We are officially into spring, so everybody can start to feel good about their good weather. Erica, I think you've had a little bit of milk data come your way from some USDA reports here recently, and I think we have more to go. What are you seeing on that front?
The dairy world has been very exciting with a lot of activity with USDA reports recently. So milk production came out yesterday, March 20th. It is for the February numbers. So first off, remember this year is leap year. So our numbers are adjusted for leap year. So the numbers I'm going to quote here are adjusted for that extra day when you look at year over year comparisons. So as we think about February, big headline number down 1.3% when you make that adjustment. Certainly close to our expectations. Nobody's saying there's a lot of milk out there, and this report certainly confirmed that for February. Interesting as you look at cow numbers, we actually did see a month-over-month increase. So as we go from January into February, cow numbers up 10,000 head. That might have been a bit of a surprise for some folks, especially when you're seeing growth in Texas and New Mexico. That was a gain offsetting some other regions. But I think the big takeaway is on a year-over-year basis, we are still down 89,000 head. And that really limits the industry's ability to grow and to bring on new animals and to bring on new milk. So as we think ahead to what's going for the rest of the year, our models are suggesting negative year over year when you take the total 2024 compared to 2023. So that is certainly, challenging and supportive news to the entire dairy complex. The big news that we are anticipating for next Monday afternoon is cold storage. And in this case, I would say there's not a lot of big surprises we're expecting there. As you think about cheese numbers, generally, we do see a growth in cheese volume. Our expectations for ending stocks in February are essentially flat to January. So not a big change there. Usually we will see a gain of about 10 million pounds on average during February. This year, I think we're going to hold steady. But at the end of the day, we've got plenty of cheese. Nobody's running short. If you need some, you can get some. So if we do see growth in inventory, that certainly could bring some more pressure on cheese prices. Certainly, we're looking at class 3 numbers. Checkout bases loaded there for the rest of this month, something close to $16 a hundredweight. That's going to hurt for a lot of folks, especially in the upper Midwest area, which is big class 3. The other piece on the butter side of things, with an earlier Easter, it wouldn't surprise me if we see fairly light build happen during the month of February. So we're only expecting 272 million pounds at the end of the month. That would be up about 23 million pounds. The 5-year average says we go up 37 million. Again, the timing of Easter certainly keeps some product out of the butter inventory. And so I don't know that we're going to see a big change in the market, really, whatever that inventory is. If you look at the numbers on the price side of things so far this year, we're on pace to have the highest Q1 butter price ever. From the perspective of the market, we're already at very elevated levels. There's a fair bit of anxiety. People need to build some stock, but they do have time yet in the season to do it later. So I think buyers are definitely sitting on edge, waiting, watching. If they see some breaks, they're going to step in and own.
All right. Thank you for that, Erica. There is definitely a lot to digest on the dairy side of the market here. I know a lot of folks were pretty excited to see feed values start to finally slide after a few years up there in a high price cycle, and more than a little bit disappointed to see dairy products make the slide right along with them. So it makes it tough to pencil out a margin.
Well, and I think the other piece, Jake, is there is this huge spread between class 3 and class 4. Historically, we'd see class 3 ahead of 4. And in this case, we've got an inverse situation of almost $4 a hundredweight. And that has significant regional impacts. Places that have strong butter powder operations, that have a lot of class 1, especially as you think about the coasts, those producers aren't doing so bad from a revenue perspective. Areas where there's more cheese production, anybody getting paid a cheese yield formula, there's a lot of hurt there. So certainly as you dig a little bit deeper, there are some winners and losers in the current situation where cheese has been a bit lower and that butter powder space holding on.
All right. Well, thank you for that, Erica. I think we're going to go ahead and take it over to Mike McGinnis now. He's got a couple of reports that he touched on a couple of weeks ago, coming out next Thursday, March 28th. We're a little closer now. We maybe are a little more confident in some of our pre-report estimates on prospective plantings as well as the quarterly stocks. So what do you got there for us, Mike?
Yeah, it is an interesting month, Jake, because the plot is thickening, so to speak, on planting. Everybody wants to know how much we're going to plant and also what the weather is going to be like. And so far, as far as the weather goes, it's going to dictate, what farmers do plant. Now, the prospective plantings report does take into account the first couple of weeks of the month of March. So the survey was done with these farmers in the first couple of weeks of March. So that does entail maybe some of their decision making if they're switching acres or not this late in the game. Now, the weather, of course, will have the final say, and we'll talk about that in a minute. But regarding this prospective plantings report that comes out next week, we take a look at the expected acreage. In general, we're expected to plant less corn this year and more soybeans. So as you take a look at the numbers from last year anyway, planted about 95 million corn acres last year. That's expected to drop about 2 or 3 million. Soybeans, last year we planted 83.6 million, and that is expected to go up about 3 or 4 million acres. And then, of course, for wheat, last year we planted 49.6, and that is expected to fall by about 1.5 million or 2 million acres. So we'll see what happens. Again, fewer corn acres, more soybean acres, and less wheat is the general feeling going into the March 28th report. We did dig into the reliability of the data from how the prospective plantings numbers come out and how it compares to the final numbers each year. So over the past 20 years, the changes between the intentions estimate for corn and the final harvested acreage that's released in January have averaged about 105,000 acre difference. Okay. And in some years, the USDA came in about 3 million acres below what the final harvested acreage number was. And in some years, they overshot it by 6 million. So there's quite the range. But on average, the USDA's difference between the two numbers, intentions and actual harvested, ranges about 105,000 or 106,000 difference. That's for corn. For soybeans over the same 20 years, March intentions estimate and the final January estimates have a difference of about 867,000 acres on average. But the USDA has come in under sometimes by 3.2 million acres, and they've overshot as high as 8.5 million. Now, some of the times what happens is why there's such a big range, the planting season turns, the weather turns. So you might have some preventive planted acreage in there. And so that shifts the acreage from where we started to where we end. And that's why there's such a wide range, I think, with the USDA numbers. The prospective plantings report estimates have been below the final estimate 7 times and above 13 times for soybeans. And if you go back to corn, the prospective planting estimates have been below the final estimate 11 times and above 9 times. So it's really your guess is as good as mine. It doesn't really lean heavily one way or the other when you dig into the numbers. So that's the prospective plantings report, Jake. And I think it's interesting to note that analysts believe that this is the top 3 market moving report of the year, one of the top 3. So it does move the market. And it's going to be interesting to see what the USDA prints on that corn and soybean number.
Yep, I think that's a pretty important one to note there, Mike. It kind of becomes the unofficial start of the new crop year. It's the first real tradable data that we have for grain and feed markets to get going early in the year. And again, like you said, it's an estimate. It changes to some degree pretty much every year by the time we get to the following January and really finalize the crop data and close out the year. And now it's worth noting that we're going to do this right ahead of a 3-day weekend, which tends to add a little extra volatility to it. So worth taking a look at your current needs, your current positions, and making sure that you're sitting in a comfortable spot ahead of a report like this.
Yeah, that Sunday night market might be pretty interesting when we open back up after the holiday there. So the other report that comes out that same day on the 28th is the quarterly grain stocks. And in general, we have very high stocks, both corn and soybean. Soybean's a little tighter, but in general, those stocks are really high. The last time we did a quarterly grain stock study, December 1st, that was the highest amount of grain on farm for that date. It's a huge number. 2.17 billion ending stocks number is what the USDA is using right now. So we know that we have a lot of on-farm and off-farm stocks. We'll see if any of this farmer selling that might have happened this past month or the previous month brought that number down. It's a real bearish number expected, and USDA could print maybe a friendly number. We'll have to wait and see. But anyway, the quarterly grain stocks report will also be highly watched on March 28th.
That's right. We'll have plenty of new information to take a look at and let the market digest there. I think a couple of notes worth making on the feed market, particularly on the cash front, is we've been kind of preaching patience. Like you said, these reports look like they could bring a confirmation of a bearish tone to the marketplace, at least for the old crop window, or at least that's what our belief is at the moment. So we've been preaching patience on some of these remaining summer needs for most of our feed buyers. I think that's still our sentiment as a team here to, buy 30 or 60 days out in front of you if you need to, and give some of these summertime windows a chance to break down prices a little further. We've got ongoing harvest in South America. The safrinha crop in Brazil is now in the ground and off to a healthy start. Potential for them to push quite a bit of corn into the export channels later this summer prior to our corn harvest. And then, of course, we're now 30 or 60 days away from peak planting windows here for most of the U.S. And we'll get a good look at what we think acres are going to be here in a week. And then folks will start to get out into the field and solidify those numbers over the course of the next 2 months here, which we think gives feed prices a chance to continue to work on this full reset of the marketplace after a 3-year high price cycle. So we'll see what next week brings. Another thing to kind of take note of is we've been hearing some chatter around the industry, particularly in the western part of the US, of some new crop numbers starting to float around, and cottonseed and canola meal. Most of the other ingredients have been fairly quiet. Some of the early offers have been fairly attractive relative to what you could buy spot today and what we've seen over the last few years. But I would encourage a conservative approach to any buying that you do for the new crop year, just for the fact that we are still early on. We're expecting some improvement in production in those 2 specific commodities, at least in the western half of the US, availability wise, that we think we could see some risk premium come out of the basis piece of that price on canola We think we could potentially see further slide in soybean meal futures over the course of the summer before we get to harvest, if weather permits anyway. And then a rebound in Texas cotton production would allow for a fairly dramatic breakdown in price there, given that all other commodities have come down as well. I can't talk anybody out of taking advantage of some decent values if you do want to get started on something early, but I would recommend something of a metered approach to your purchasing there. Of course, if you want to talk in depth on anything specific there, we've always got the EverAg feed team ready to talk through those with you and your specific situation. So reach out to us. Contact information is available on the screen. Otherwise, that will do it for this episode. We would like to thank the EverAg Insights team for their support. We'd like to thank you, the viewers, for watching. Our contact information, as said, is on the screen. We greatly appreciate your feedback, and we'll catch you next time on another edition of the Grain Feed.